Good afternoon and welcome to your weekly FX options report. Today is Wednesday, February 10th, 2010. The broader U.S. equity market does remain in negative territory but has pared back from earlier losses. Now, investors do continue to focus on the latest earnings reports as well as economic data, but much focus has been placed on speculation of a Greek bailout package. Now, the latest update regarding a possibility of a rescue plan for Greece is that a government official from Germany did say that the EU will stop short of announcing aid for Greece. Now, all eyes will be on the gathering of EU officials in Brussels on Thursday. In terms of U.S. economic data releases released on this Wednesday, we saw that the trade gap did widen to $40.2 billion in December. Also, exports rose by $4.6 billion, while imports climbed by $8.4 billion. Now, taking a closer look at the spot FX market, the U.S. dollar has reversed what we saw in earlier trade and is higher against the euro, pound, as well as the Japanese yen. Now, earlier the dollar yen was lower, but it did turn around in mid-morning trade. And this does come as Fed Chairman Bernanke's remarks show that the central bank may be raising interest rates as well as the discount rate before too long. Now, although the Fed may not be ready to hike rates, there has been disappointment in reaction to the plans to dismantle the bank's economic supports. Now, one way to trade your views on U.S. dollar strength or weakness is to take a look at IC's FX options. One advantage is that they are U.S. dollar denominated. For more information, you can go to www.fxoptions.com. Now, let's take a closer look at the major FX option pairs, starting out with the AUX, which is the U.S. dollar against the Australian currency. Now, for that pair, a continuation of the rebound is expected. It is shaping a rounding bottom, which does call for further recovery. And the preference of trading central analysts for the AUX is long positions above the pivot of 106, with targets standing at 118.15 and 122.50 in extension. Moving on to the BPX, which is the U.S. dollar against the British currency, the upside does prevail. Now, the RSI is supported by a rising trend line, and the pair has rebounded on its support. It also stands within a bullish channel. The preference of trading central analysts for the BPX is long positions above 61 with targets at 65.50 and 68 in extension. And for the CDD, which is the U.S. dollar against the Canadian currency, a continuation of the rebound is expected. Now, the pair has broken above a key declining trend line. And meanwhile, the daily technical indicators for the CDD are well directed. The preference of trading central analysts for that pair is long positions above the pivot of 102 with targets at 107.50 and 111.25 in extension. And moving on to the EUI, which is the dollar against the European currency, the upside does prevail. It does stand within a bullish channel and is approaching its resistance. Now, the preference of trading central analysts for the EUI is long positions above the pivot of 71 with targets currently standing at 73.50 and 75 in extension. Taking a quick look at the SFC, which is the U.S. dollar against the Swiss franc, a continuation of the rebound is expected. The RSI does call for a further advance, and the preference of trading central analysts is long positions above the pivot of 104, with targets standing at 108 and 110.25 in extension. And last but not least, for the major FX option pairs, let's take a look at the YUK, which is the U.S. dollar against the Japanese yen. Now, for that pair, the upside does prevail. It is rebounding on its new support, and the RSI is turning up. The preference of trading central analysts for the YUK is long positions above 88 with targets at 93.50 and 96 in extension. And now let's move on to your weekly trend opinion for the major IC FX option pairs. Now, last week, the U.S. dollar did recover, and Trading Central opened the following positions. Puts on the GBP, which is the British pound against the U.S. dollar, and they did open calls on the PZO, which is the U.S. dollar against the Mexican peso. Now, in terms of portfolio performance so far, since its inception in August of 2007, it is up by 1,457.33%. And since the beginning of this year, their portfolio is up by 156.52%. And now in our next segment, we do bring you a couple trade alerts. And let's start out by looking at the NZD. Now, Trading Central did recommend in their follow-up this Monday to consider calls on the NZD. Now, they are considering that because the pair was breaking above its bullish channel upper boundary and also shaping a rounding bottom. Now, in terms of another traded alert for you, they will be looking at the EUI because it has struck against its strong resistance at 73.50, but does remain within a bullish channel. Now, a rebound is therefore likely on its next support. Now, taking a look ahead to next week, Trading Central analysts will be looking at both the AUX as well as the SKA. They will be looking at the AUX, which is the US dollar against the Australian currency, because it is challenging its strong resistance at 118.50. And a break above that level will validate a rounding bottom and call for further bounce. Now, they will be looking at the SKA next week because it is also challenging its resistance, and a pullback should not be ruled out before a further up move. And that does wrap it up for this week's FX Options Report. Make sure to tune in next Wednesday for your latest update. Thanks for watching and have a great day.